In this video, you are going to learn cash flow management.
Before we start learning cash flow management, we should know what cash flow is. Cash flow refers to the movement of money in and out of a business or individual's financial accounts over a given period. It is the net amount of cash that a business or individual has on hand, after accounting for all incoming and outgoing cash transactions during a specific period, such as a month, quarter, or year. Positive cash flow occurs when a business or individual has more cash coming in than going out. In comparison, negative cash flow occurs when more cash is going out than coming in. Positive cash flow is generally seen as a sign of financial health, as it indicates that a business or individual has enough cash to cover its expenses and invest in growth opportunities. Cash flow can be categorized into three main types: operating cash flow, investing cash flow, and financing cash flow. Operating cash flow includes cash generated from the normal operations of a business, such as sales revenue and accounts receivable collections. Investing cash flow includes cash used for investments in assets, such as property, equipment, and securities. Financing cash flow includes cash from financing activities, such as loans and equity financing. Monitoring and managing cash flow is important for a business's or individual's financial health, as cash flow fluctuations can impact the ability to pay bills, invest in growth opportunities, and achieve financial goals. Now come to cash flow management. Cash flow management is the process of monitoring, analyzing, and optimizing the inflow and outflow of cash in a business or personal finance context. It involves managing the cash resources of an entity in a way that ensures the entity can meet its financial requirements in a timely manner, while also maximizing the use of available cash to generate revenue and grow the business. Here are some common cash flow management strategies that businesses and individuals can use to improve their cash flow situation. Number 1. Forecast and track cash flow. One of the first steps in effective cash flow management is to accurately forecast and track cash flow. This involves creating a cash flow projection to estimate future cash inflows and outflows, and regularly monitoring actual cash flows to ensure that they align with projections. 2. Improve invoicing and collections. Ensuring that invoices are accurate and timely, and following up with customers who are past due on their payments, can help improve cash inflows and reduce the risk of cash shortages. Number 3. Manage expenses. Reviewing and cutting back on unnecessary expenses can help free up cash and improve cash flow. This may include reducing inventory levels, renegotiating vendor contracts, and reducing overhead costs. 4. Negotiate payment terms. Negotiating payment terms with suppliers and vendors can help improve cash flow by extending the time period between payment and receipt of goods or services. Number 5. Optimize inventory management. Proper inventory management can help reduce the amount of cash tied up in inventory and freeing up cash for other uses. 6.
Consider financing options.
Exploring financing options, such as loans or lines of credit, can provide a source of cash to cover short-term cash shortages or finance growth opportunities. 7. Use cash flow management tools. There are many software tools available that can help businesses and individuals manage their cash flow more effectively, including cash flow forecasting and management software. By implementing these cash flow management strategies, businesses and individuals can improve their financial stability, reduce the risk of cash shortages, and position themselves for long-term success. If you find the video helpful, please give it a like. That will be helpful for this channel.
Let's discuss some benefits of cash flow management.
Improved financial stability. Cash flow management can help businesses maintain stable financial operations and avoid cash shortages. By having a clear picture of their cash inflows and outflows, businesses can take proactive steps to manage their finances and avoid financial distress or even bankruptcy. Better decision-making. Cash flow management can provide businesses with the information they need to make more informed financial decisions. By understanding their cash position and forecasting future cash flows, They can make smarter decisions about investing in growth opportunities, managing expenses, and financing activities. Reduced borrowing costs. By having enough cash on hand to cover their expenses and obligations, businesses and individuals can avoid the need for costly short-term loans or credit card debt, which can save on interest costs and fees.
Increased profitability.
Effective cash flow management can help businesses maximize their profitability by minimizing cash shortages and freeing up cash for reinvestment in growth opportunities. Improved relationships with creditors and suppliers. Effective cash flow management can help businesses and individuals to pay bills on time and meet financial commitments. By doing so, businesses and individuals can establish trust and credibility with creditors and suppliers, which can lead to more favorable payment terms and pricing. Increased flexibility. Effective cash flow management can provide businesses and individuals with greater flexibility to adapt to changing market conditions or unexpected events, such as economic downturns or unexpected expenses. Now move on to the drawbacks of cash flow management. While cash flow management can provide many benefits, there are also some potential drawbacks to consider. It is time-consuming. Cash flow management can be a time-consuming process that requires careful tracking and analysis of cash inflows and outflows. This can be particularly challenging for businesses or individuals with complex financial operations or multiple income streams. Limited flexibility. Cash flow management strategies, such as reducing expenses or delaying payments, can limit the flexibility of businesses or individuals to respond to unexpected opportunities or challenges. This can be particularly challenging for businesses that operate in rapidly changing markets. Inaccurate projections. Cash flow forecasting can be challenging, particularly if it is based on inaccurate assumptions or incomplete financial data. This can lead to inaccurate cash flow projections that can impact financial decisions and planning. Overall, while cash flow management can provide many benefits, it is important to balance the benefits against the potential drawbacks and consider the specific needs and goals of each business or individual. By developing a comprehensive financial management plan that includes cash flow management strategies and tools, businesses and individuals can achieve greater financial stability and success. Let's discuss some of the cash flow management tools that help businesses and individuals manage their cash flow more effectively. Here are some of the most common cash flow management tools and how they work. Cash flow forecasting software. This type of software helps businesses and individuals create accurate cash flow projections based on past financial data and future expectations. Cash flow forecasting software typically allows users to input cash inflows and outflows, set up different scenarios, and generate reports that can help identify potential cash shortages or opportunities. Online banking tools. Many banks offer online banking tools that can help businesses and individuals track their cash inflows and outflows in real time. Accounting software. Accounting software, such as QuickBooks or Xero, can help businesses and individuals manage their finances more efficiently and accurately. Budgeting software. Budgeting software, such as Mint or YNAB, can help businesses and individuals create and track budgets more effectively. These programs typically include cash flow management tools, such as cash flow projections, expense tracking, and goal setting. Financial planning software. Financial planning software, such as Personal Capital or Wealthfront, can help individuals manage their personal finances more effectively. If you want to read in details or download the PDF, go through the link in the description. If you want to suggest me any topic, feel free to send it on Instagram or by email, and don't forget to subscribe to Education Leaves.